What we're beginning to see is widespread acceptance of $50 oil and that persisting for some time. So I think the question that we're discussing at the conference today is how do we get ourselves fit for a long-term period of $50 oil or $50 or thereabouts. So the question we're looking at is what do we need to do as an industry in order to prosper in that environment? And I think what we've discussed over the last day and a half is really three things. One of which is getting to a stage where we remain economically relevant, and that means we need to compete with other sources of oil production. And the one that I think has been discussed most here has been shale oil. And shale oil is looking robust at $50, so we have to figure out ways in which we can make floating production systems, FPSOs, economically relevant still at that sort of oil price. If we do that, then there are lots of developments that we can envisage going forward at that sort of oil price. The second thing is I think we have an action to get better at delivering our projects on time and on budget. The FPSO industry doesn't have a terribly good record over the last few years of delivering on time and delivering on budget. So we need to do that better in order to restore investor confidence in the sector. If we do that, then again, it will support more projects going forward in this sort of oil price environment. And then the third thing is we need to look at operational efficiency and look at ways in which we can become better at providing life cycle value. So that's not just looking at reducing capex, but looking at ways in which we can improve OPEX as well. There are technology opportunities for us to do that, which will allow us to improve efficiency, improve reliability, reduce maintenance costs, and ultimately to reduce manning on FPSOs to a level which makes them more cost effective. So those three things together I think will allow us to continue to be relevant and prosper in a $50 oil environment over the medium term.